Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. The market, it's too hot for me to wear appropriate clothes, so we're going to stick with just the charts today. Looking at SPY, we broke the low of yesterday and saw very little follow through, and yet again another day where we only had one of our major three sectors at a time hitting the low of the day. We have to see them doing it in unison if the bears are going to get any follow through. And overnight tonight, we're watching the S&P 500 futures chart for the 4-hour tightening range because it's getting interesting. High, low of the pullback, holding the 4-hour 12-period exponential support, which at this point has been holding for over a week. Lower high is looking like it's being set here. If we drop down and break 31.9210, we will confirm a clear 4-hour downtrend. We will lose this exponential support for the first time in over a week, and we'll then zoom out to the 12-hour time frame. At this point in time, this is a potential 12-hour bull flag. If that 4-hour downtrend confirms, the odds of it being a 12-hour bull flag will decrease, but we will still be looking for a 12-hour higher low. We will still be looking at the 12-period exponential support, which has been holding for 3 weeks on this time frame. And remember us pointing out the RSI being overextended. It's now cooled off significantly with the pullback that we saw overnight last night, and most of that pullback was weakness in the financial sector. Today was a day where the financial sector pulled back and the tech sector bulls took over. Apple, Amazon, Microsoft, all-time highs. I think Microsoft finally got there. We were testing it. Nope, double top at the all-time high. But lots of strength, sector rotation. And until we see all three sectors hitting the lows of the day at the same time and bear volume, we know the bulls have complete control. IWM pulling back with XLF. Keeping in mind we got the Fed tomorrow at 2 p.m. Eastern. So not surprising to see the financial sector with profit taking. We went up 15% over the span of a week and a half. So some profit taking to protect against what the Fed's going to say tomorrow. IWM daily consolidation. We know anything above, anything above 136.41 will be a daily higher low. Could this be a daily bull flag? Yes, that is still possible with the amount of consolidation we've seen to this point. QQQ lead bull all-time high, led by the names I just talked about. Facebook and Netflix had big bull days as well, and plenty of space. Anything above 233.68, which is about 4%, is a daily higher low. XLV, healthcare, pulled back today. The weakness at the end of the day today was because of the healthcare sector, but by that point, the financial sector had already bounced significantly from its low of the day. So again, only one sector at a time today was at its low at any point in time. Anything above 192 is a daily higher low. Definitely getting a little bit toppy here. We've gotten a couple bull breaks with no follow through, but until we see a loss of the daily higher lows, the bears who have the burden of proof squarely on their shoulders are not proving anything to us as long as we're in a daily higher low pattern. There's the financial sector consolidation. As you can see, it's still very healthy at this point as well. There's little support down here. If we do break the low of today, 25.92, the gap to fill is 25.30, but it is very healthy daily consolidation, and at this point, it is a possible daily bull flag. Tomorrow is going to be very telling for IWM and XLF as to whether or not we can say, yep, that is a bull flag, or nope, this consolidation is too significant. Bull flags out the window, but still looking for daily higher lows overall. Biotech sector still remaining tight. We had resistance of 106.11. We rejected by 6 pennies. Nice top fishing play for bears there, and we're viewing this as a tightening daily range with the most important support of 101.24. SMH, semiconductors, potential daily bull flag. Very brief consolidation. If this inside bar from today breaks bullish, then we're looking right back up at the high. And then from there, we're looking at the all-time high. And that is the all-time high. The VIX is bouncing and getting some follow-through. The most important level is 30.60 from here. Anything under that is a daily lower high, but it is a pretty decent bounce off of this low. Let's look at percentages on our ETFs. 106 to 125, so a solid little 18% or so, but still a daily downtrend. And that is the most important factor. So we have to see a trend change if we're going to see the volatility sector get any follow through on these bounces. Gold, solid bounce on the daily with the inside bar breaking bullish. It's keeping the weekly consolidation healthy, back testing and holding exponential support. And we need to see a 4-hour loss of this uptrend to say our daily lower high has been set, because anything under 1745 is a daily lower high. The size of the bounce at this point is creating space where we can be watching for a higher low to try and form next time we top out, keeping in mind we already had that once and the pullback ended up being significant. So we are watching for a loss of the 4-hour uptrend to indicate a daily lower high has been set. And as of right now, anything above 1692 is a 4-hour higher low. Silver not nearly as strong as gold today. So we know the XAU XAG chart is seeing a bull move because gold is gaining strength against silver. Silver is a potential daily head and shoulders here. We're watching the 4-hour equilibrium, very different than an uptrend that gold is seeing. So high of the bounce, low, lower high, and key support of 1747. If that level breaks, the odds of a daily lower high forming here increase a good bit, and then it's all about 1722 from there. Miners, nice top fish for bears today. GDX had a double top of resistance at 33.59 and we topped out at 33.47. We rejected by 12 cents. GDXJ, we had a lower high of resistance at 45.74. We topped out today at 45.72 by 2 pennies. So a little bit of weakness there. Curious to see what we get in terms of whether the direction that silver breaks this 4-hour equilibrium. Keep in mind, silver can give us a clue here on gold because silver would likely break this pattern bearish before gold would lose its 4-hour uptrend. So maybe silver will give us some clues depending on when it breaks. Oil, very healthy daily consolidation, potential bull flag. We confirm the 4-hour downtrend, but we knew that just means zoom out and look for a daily higher low because anything over 31.14 was a daily higher low. And at this point, not even touching the daily 12-period exponential support, it is a potential bull flag. Inventory report tomorrow will either look to confirm it or look to test the 12-period exponential support. Natural gas, still very tight. Short-term levels, all I care about is 1635, the low of the last 4 days, and 1722, the high of the last couple weeks, week and a half. And we have to see a bull break. It's all about the weekly 12-period exponential resistance. Look at these rejections. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row. Keeping a close eye on that moving average. So, big picture, sector rotation is keeping the bulls healthy. Every single morning on live stream, what I'm doing in the first half an hour is staring at our 3 sectors and seeing who's hitting the low of the day, who's breaking their low of yesterday, who's holding on just fine. And every time I see a sector out of one of our 3 hitting the low of the day and I look and I see another sector at the high of the day, I know, nope, this isn't it. The bears are not proving it to us. So at least there's been no fake outs using that as a guide. The first day where we see all, I've said this already, but the first day we see all 3 of our major sectors hitting a low of the day at the same time will be very notable to us because it's been a very long time since that has happened. On the dump down, on the COVID drop, our sectors were doing everything in unison. On the start of the V-shaped bounce, they were doing it in unison on the way up. And now, since the initial momentum of the bounce was lost, which is certainly quote-unquote lost, it was just rotation. Tech held us up, then tech cooled off, and then the financial sector caught up, and the healthcare sector caught up, and it's just been beautiful rotation. And as long as that happens, bears have nothing. We'll keep an eye on everything. Let's see how this 4-hour trend goes on the S&P 500 futures chart into tomorrow. And let's see if the Fed shakes things up with whatever they're going to say at 2 p.m. Eastern. Keep in mind on Fed days, we generally see our normal volatility to start the morning in the first 30, 45 minutes. And then we usually see things calm down as everybody looks towards 2 p.m. for information and for the volatility to pick back up again. Have a good rest of your day, and don't forget to do good things. First beats of the season, and tonight's dinner. Basil and dill and peas. Oh my. We got pickled beets on the right and pickled Chinese pink celery on the left with dill and garlic. These are what onion flowers look like. These are bush beans on the side here and runner beans that have started running, climbing up the trellis.